So if you're planning on buying a house in the next 3 months, I'm going to be going over all the steps that you need to know up front in order for you to do it the correct way. Because here's the thing, a lot of times when people think of buying a home, they're instantly filled with anxiety, they're overwhelmed, and it's all because they don't know what the first step is, they don't know how to begin or even where to begin. And what they end up doing is they end up going online, looking at houses, seeing their dream home fly off the market, and they get discouraged. And it's all because they didn't have the right steps in place and they couldn't take action. And you want to be ready so when your dream home comes on the market, you can take action, you can write an offer and close on the home. So we're going to be going over all the steps that you need to know in order to achieve this. And if you're new to my channel, my name is Meredith. I'm a mortgage broker. I put out educational videos every single week, tips on home buying, tips on home ownership. So make sure you hit that subscribe button so you get notified every time I put a video out. Now let's get into it. Okay, so day one is knowing your budget up front. And you want to start with knowing exactly how much you can afford. And a lot of times people skip this step, and you don't want to do this because this is going to end up hurting you in the long run. And here's the thing, if you have no plan, you're going to feel like you've been taken advantage of at the end of it. You're going to feel like you got pushed into a monthly payment that wasn't really suitable for you. And you never want to have the lender tell you exactly how much you can afford. You yourself, you need to know this. So here's a couple of tips. You want to look at how much of your income is going towards your expenses. You can do this a number of different ways. You can do different apps that kind of break down your spending habits. You can go line by line on your bank account, use an Excel spreadsheet. You can also analyze how much you pay in rent. Look at, is this comfortable? Is this payment comfortable for me? Can I spend a little bit more and still have the lifestyle and the savings that I have? Or is this rent payment do I need to lower this amount? And the main thing is you want to determine how much your budget is for your monthly payment, for your mortgage payment, how much you want to pay up front. Now let's go over how to get pre-approved. And here are really the three major factors that the banks look at when qualifying you. And it's important that you really understand this and know this up front so that you can know how it pertains to your pre-approval so that you can manage your expectations. So number one is going to be your credit score. So generally speaking, you need at least a 620 credit score to qualify. Now you'll see a lot of banks advertise that you can go below, even low as 500. And yes, that might be true. Generally speaking, you're going to need a lot higher down payment, typically 10% or more, and you're going to get killed on the rate and the fees. So as far as credit score really impacts how much your interest rate is going to be. The higher your credit score, the better interest rate you're going to get. Now, number two, a really big part of this is income and debt. Now, the income is really directly tied to how much you can get approved for, how much house you can afford. And they look at how much monthly income you're bringing and also how much monthly debt you have as well. And a good rule of thumb is, generally speaking, you can take your yearly income, multiply it by 4, and this will give you an idea of how much you'll get approved for. So let's say you make about $50,000 a year, multiply that by 4, you could probably get approved for around $200,000 house, give or take a little bit more, a little bit less. Just a lot of it depends on your monthly debt that you have. Then they're going to look at your savings because you do need money for your cash to close. This is going to be for your down payment and your closing costs. And they also look at if you have enough left over to make your first mortgage payment. Okay, so day two is getting pre-approved, and the whole purpose of this is to make sure that you can qualify for getting a mortgage. And in the pre-approval process, they're going to be able to determine a couple things. One, they're going to determine what loan type is best for you in your situation. Now, the lender is going to tell you you can qualify for conventional FHA, 0% down for USDA or VA, or which other one is best for you. You don't have to go to separate lenders to do this. One lender will be able to look at all the loan products and tell you which one is best for your scenario. Then they're also going to tell you exactly how much your max purchase price is, how much home that you can afford for the maximum amount. Now, here's the next thing that's very important. They're also going to tell you the monthly payment. Not all lenders do this up front. Some lenders just tell you the max purchase price, but you want to make sure that you ask them, what's my monthly payment going to be? Because you might be able to get qualified for like a $600,000 house, but you might not like that monthly payment. So it's important that you go over this with your lender. You can also tell them, hey, listen, I only want to pay $2,000 a month or $3,000 a month for my mortgage payment. Where do I need to be as far as a purchase price of a home? And they'll tell you. They're also going to tell you exactly how much you need for your down payment and your closing costs. Okay, so day 3 is you want to come up with a needs/dreams list, and you want to do this before you talk to a realtor. And the reason is when you get to that point, you want to be able to communicate effectively upfront exactly what you're looking for in a home. And you have to remember, your first home, it's not going to be your dream home. You're actually going to use that first home to buy your dream home later on. So what you want to do is take out a sheet of paper, make sure you're doing this with whoever you're buying the house with, and on one column, write out everything that's a need for you, everything that's non-negotiable. And on the second column, come up with anything that's a want or what's a dream for you. Now, when I bought my first home, I skipped this step. I was really focused. I really wanted a pool. That was my dream. And because of that, I turned that into a necessity. And there at that time, for my price range, there was not that many houses on the market that had an in-ground pool. So I ended up compromising on the house to get the pool, and I bought a fixer-upper, and it at the end of the day, it cost me a lot more money out of pocket. Looking back, I should have X'd out the pool, bought a lot better home in a better condition, and I would have been a little bit better off. So make sure you don't skip this step. Make sure you're really clear and understand, and it's okay to change, but just upfront know exactly what your needs and want is. Now let me go over how to find a realtor. Okay, so day 4 through 8 is finding a realtor, and you want to find someone that you ultimately trust. Don't want to work with a realtor that's just going to try and put you in a home just so that they can make a quick commission. You want to find someone that ultimately is looking out for your needs, not just their own. And here's the thing. All realtors, they have the same access for homes. It's not like one realtor has exclusive access to this homes. That's not the case. And the main thing is they help protect you throughout the transaction with holding the contract. And another thing you want to make sure you understand is the number of years does not necessarily equal experience in the real estate world. Real estate world, the market changes every single year. So someone that has done business for 20 years, but they haven't closed a home in the last year or even the last 6 months does not really understand, because they're not doing current business. They don't understand the current real estate market. Now let's go over the cost of how much it costs to hire a real estate agent. Okay, so generally speaking, a realtor gets paid once the home closes, and their commission is a percentage of whatever the purchase price is. Generally speaking, it's around 2 to 3% or whatever is negotiated up front. And it's typically paid by the seller. But in the event the seller is not paying for your realtor's commission, then it would fall on you. And so you want to make sure you know up front, ask them, if the seller is not going to pay your commission, how much are you going to charge me, so that you are able to plan ahead. Okay, so now that you found a realtor, the next step is going to be to go out home shopping. And this can take anywhere from the first week you can find a home, or it can take several months. So there's really not a set time frame for this. And what you want to do is, a lot of times people that make the mistake of jumping right in and going to see any and every house, and they don't take the time to sit down with their realtor, have a conversation, and go over these 3 things. Number 1, you want to go over not only your pre-approval amount, but also the type of loan that you're pre-approved for, because this is going to dictate the type of house that you can find. Then you want to go over, of course, your needs and dreams list, so that your realtor can have a clear understanding exactly what you're wanting. Then you want to also go over location. When you're looking at location and you're looking at a neighborhood, it's important to go to that neighborhood several different times of the day, several different times of the week, so you get a true feeling of what that neighborhood is like. And then they're also going to give you access to the MLS, which is the multiple listing service. And this is like Zillow on steroids. It's going to give you a ton of information on the house, a lot more than what you can find on realtor.com, Redfin, or Zillow. Now, it's also very important for you to have your lender in communication while you're out home shopping, because the payment can vary from house to house. So in this example, you could have 2 houses that are listed for the exact same price, but their monthly payment can be totally different. And the reason is the taxes are a variable. So you could have one house that's listed for $320. The taxes are, let's say, $200 a month. And then you could have a different house listed for the same price, but their taxes are $400 a month. So make sure you are in communication with your lender. Now let's go over after you get the offer accepted. Okay, so now that you found the house, maybe you found it through looking at pictures online, you're ready to submit an offer, or your realtor set up a showing, you saw it in person, you love the house, and you're ready to submit the offer. Either one of those two scenarios is fine. And what you want to do is you want to talk with your realtor up front about the different terms of the contract. Now, there's so many different ways you can negotiate. It's not just about the price. You can negotiate the length of the contract, how many days, 30, 60, 90 days, 15 days to get to the closing table. You can negotiate the length of your inspection period. You can negotiate if the seller is going to pay for a part or a portion or all of your closing costs. There's so many different ways. So talk with your realtor up front about what you want to send to the seller. Then the realtor will write up the contract based on what you guys have talked about. And then the seller can do either one of two things. Either the seller can counter your offer, and then they'll send it back to you. If you accept, then you're under contract, or you can counter it back. Or your seller might accept it right when you send it in. And then at that point, you are under contract. So let's go into the next steps once you're under contract. Okay, so now that the seller accepted your offer, you're officially under contract. So here are really 5 key dates you want to make sure you're aware of so that you don't end up getting screwed throughout this process. So day 1 through 3 is you're going to send in your earnest money deposit to the title company. They will hold it. It never reaches the hands of the seller. And this is typically about 1% of the purchase price. This is negotiable. It's not set in stone. And if you fail to send this in within a certain amount of time, then the house can go back on the market. Then your inspection period is usually anywhere from 7 to 15 days. And during this period, you're going to have a licensed inspector come take a look at the house. He's going to tell you everything that's wrong with it, everything that needs repairs, or maybe potentially could go wrong later on down the road. Now, during this time, if you need to negotiate anything, you must meet the deadline, because after this deadline passes the inspection period, the seller is not required to fix anything at all. Then during that same time, anywhere from about 2 weeks into the contract, it's going to be your mortgage contingency. You must get an approval by the underwriter. You must have submitted a loan application during this time. And if you fail to do this, then you can lose your earnest money deposit. Then you'll also get your title commitment from the title company as well. And what they do is they run pretty much like a background check on the home to make sure that you're buying the house that's free and clear, that's not going to come up with any lawsuits later down the road or have any liens or judgments attached to it. Then next is going to be your appraisal due date. And what's going to happen is the bank is going to send out an appraiser to make sure that you're buying the home for what it's worth and nothing less. And there's 2 things that can happen. If the house appraises for less, this is where we have issues. The bank can only lend you the amount that the house appraises for. So let's say you're buying a house for $400,000, it appraises for $390,000. Then you have a $10,000 gap. So either what needs to happen is the seller needs to drop the price, or you have to pay the difference, or y'all meet in the middle. If you can't negotiate when the house appraises for less, then as long as it's within this due date, you can break the contract. Now, if the house appraises for more, nothing changes on your end. You just have instant equity. Then after that, then you go back into underwriting, and you'll get the finalized clear to close. You'll get the finalized numbers, everything that you need to send, your down payment, closing costs to the title company, and all the docs will go to the title company. You'll sign, and you'll get the keys to the house. So if you're planning on buying a house and you have questions or need my help, click on the link in the description, book a call with me. I'll be in touch, and I hope you found this helpful, and I'll see you on the next one.